What is going on, everybody? We're here, we're live. Welcome to the Signature FX pre-market show with me, Andrew, and yet again, no Mandela. So, got some good news, got some bad news. He's no longer a co-host on the show, but he has been promoted to our overseas correspondent. So yes, Mandela will be reporting live from Bermuda in the week. But to be fair, yeah, if his jet setting was a strategy, he's going to have a 100% win rate, right, chat? So, okay, we got a little bit to get into, and we have got NFP in about 5 minutes. I'm hoping that James is going to join us from Macro Markets Group, and he's going to talk us through the NFP. If not, yeah, we're just going to pull up the chart and we'll just sit back, watch the fireworks, and once the NFP data's come out, we'll have a look at the effects, and I'll quickly give a quick explanation of what NFP is. Luckily enough, Mandela did send me a script for the NFP to explain it. So yes, we can go through that. And yeah, we've got about 4 minutes to go. So while we're waiting for James, we'll actually rejig the show. And let's go into a trade I took this morning. So let's have a quick look. Okay, so we had a nice trade this morning on gold. Yeah, it actually woke me up. And yeah, we got a trade. We went long on gold. So I took this on the 10-minute chart, and we're actually trading gold divergence against the dollar. So yeah, set up some alerts on TradingView. We got into that trade and we took 600 points. So this was on my CTI account. So I'm trading CTI with you guys now. And every week I'm going to give you an update. The good, the bad, the ugly. Yeah, but I'm locked in for this account. So we trade in a 50K account. And if we pass this, we're actually going live with the guys at CTI. So if anyone else caught this trade, please let me know in the chat. And we have James backstage. So excellent timing. Yeah, saved by the bell. And welcome, James.
Hello, Andrew. How are you?
I'm good, mate. I'm good. I'm sweating a little bit. I thought I might have to go to Mandela's notes for the NFP. So I'm glad you're here. So thanks very much.
Making sure it's all set. Obviously, we're a few minutes out from NFP, so I'm gonna go through and quickly give people the rundown into the data as we're a few minutes out, and then I'll get the squawk on. So obviously everyone can hear the news come out at 1:30, and then you've got me for half hour. We can talk what's been going on this week, talk markets, go through some of the charts. Talk about some of the interest rate expectations that have changed, and I'm sure a lot more. But thank you for having me on this lovely Friday afternoon.
No, it's always a pleasure. And you know yourself and Joseph, you're always welcome. You're just you're part of the team, right? So whenever you guys want to jump on, just let us know, and just jump on the shows with us. Really appreciate your input, especially the in-depth knowledge that you have, you know, of all the mechanics that's going on in the background, right? So, you know, a lot of us traders ignore that. So it's good to have like yourselves and Mandela explaining the ins and outs and why these charts are moving.
Right, let's jump into NFP preview quickly. I think my screen is there to be shared. I'm not sure if you can click across on it and share that to everyone. There we go, lovely. So NFP, we're a couple of minutes out. Obviously, all eyes are on the jobs report, and the dollar and equities are keeping a little steadier. But obviously the NFP release is the only kind of thing that the markets really care about today, with little else to distract from it. Obviously on the geopolitical front, US-Iran developments remain uncertain still. Feel like that's been the story pretty much all year now. And we're awaiting the Strait of Hormuz arrangement between Iran and Oman. But after a much softer June figure, the NFP payroll estimate today is expected at 80,000. And it'll be interesting to see if there's any potential effects from the World Cup to boost private payrolls. It wasn't the case in the June report. But besides that, a lot of analysts are pointing to potential for a modest drag from government payrolls this month. And this comes after an uptick in government hiring in May. But about a minute out, we're going to quickly go through the distribution of forecasts. This is how you kind of get the expected data. This is kind of the average. And for NFP, we can see that the 80,000 is the consensus. There's a range from 10 to 140k, and there's a 70 to 80k range where most are clustered. But the data is just coming out. I'm just connecting to
employment change coming in at 75k high in the forecast of 20k.
75k,
and also looking at the private payrolls at 30k, low in the forecast of 82k, prior revised to 30k from the original prior of 49k.
That was on a private. NFP is actually minus 23,000. Shocking number.
US unemployment
way
rate
lower than what was
1%,
expected.
4.1%, lower than the forecast.
So we've got
That's
gold
minus
pumping nicely,
23,000
moving
for
towards the downside.
NFP.
S&P 500 moving towards the upside.
Minus 23,000. Unemployment rate 4.1%.
Hourly,
but that's
average work week hours
number.
34.3 as expected. Average earnings month to month 0.1%, lower than the forecast of 0.3%. Canadian participation rate 65.1%, 65.1%.
So as you can see, minus 23,000. Shocking number from NFP. Really, really bad. Nowhere near what was expected. The unemployment rate a little bit better and would be more of a focus for the Fed, but NFP will obviously steal the headlines, and off the back of that, you're immediately seeing the dollar lower across the board. Obviously, indices gaining a little bit and gold ticking up even further. Gold's really been the winner today, up about now 2.75%, and silver up over 5% as well. But shocking numbers there from NFP, right, Andrew?
Yeah, so I'm just watching my charts now. So yeah, we got gold having a nice rally up, creating some new highs today. And yeah, we got the S&P as well following suit. So yeah, the open's going to be interested, for the opening range breakout traders. I'm one and done with gold. On the beginning of the show, just saying caught 600 points early this morning on that rally up. So yeah, let's have a quick look at the charts and let's see what it's doing. So okay, we got gold here. Yeah, we can see gold pushing up. It's up, was it 43.59, and it's creating new highs for the day. So for myself, I don't like to trade into the daily highs. Yeah, normally I like a high, like a retest, and potentially use that as an upside target. So I would be wary trading gold today, but luckily enough, I got in early this morning. Looking at the S&P, yeah, we've had a nice push up on the S&P, and we've also got Bitcoin following suit, trading around 65. So Bitcoin's just one to watch, right? It's a bit of a sleeping asset at the moment. Nobody's talking about Bitcoin. I have seen the sentiment of traders from Mandela yesterday, where the smart money is actually looking to short Bitcoin. So we could see a bit of a liquidity pull here. We could see some of our retail traders actually jumping in to the king of crypto. So yeah, I'm going to keep an eye on that. And let's just have a look at what gold is doing. So yeah, gold's moving nicely, right? We'd be going into these volume areas here, or what we'd call resistance, and we just popping through them, right? So as we get in some better news from the Middle East, we're starting to see gold come out of that lull of the bear trend that it was in, and we seem to be getting a nice push up. So next upside targets, we could be looking at last year's high. So yeah, some interesting times for gold. Just want to quickly cover an S&P trade I done yesterday. So yeah, we just had a lot of sideways action yesterday. So yeah, we got a breakout of the opening range, following the rules, price retest, took the trade, we got a push up and then down into our stop loss. So yeah, we can't win them all. And we'll be looking at it today, and potentially I'll be looking at that opening range breakout. But if I was to guess, potentially we could be looking at a long position today. What are you thinking, James? What's your what's on the agenda for today?
Just having a little read through just some of the different headlines and the different things that are coming out. Obviously the actual numbers obviously shocking on the surface when you really look at it. Minus 23,000, below the expectation of 85,000, and unemployment rate did fall to 4.1%. But I think what was interesting in the the June job number was also revised lower. So last month, NFP was expected at 114,000 and it came out at 57,000. So obviously it was a bad report. And they've basically released the NFP today and said, actually, we messed up last month. It wasn't 57,000. It was actually 20,000. So they got it wrong. So it's a couple of really bad months employment data wise now, because obviously, like I've just said, the July release, which was June's data, was expected at 114 and was actually 57. That's now been revised low to 20k. And on that release in July, which was the 2nd of July, obviously last month, they also revised the previous month's data lower. It was still a beat in the end, but revised it lower. So it's now almost really like the last 3 months of NFP data hasn't been great or as good as it seemed. And that's probably now putting a little bit of pressure on the Fed. So it's interesting. But the other side of that is, although this is the 3rd biggest monthly job loss since the pandemic in 2020, some people are saying the jobs report isn't as bad as what the headline makes it seem, because there's a huge amount of job losses in government jobs. And the unemployment rate is obviously 4.1 versus the 4.2 that's expected, which is, a little bit better. So maybe it's not as bad as it seems, because it's maybe huge losses in government jobs. But I don't think the market will care too much about that, considering now the last 2 months we've had revisions lower on the jobs data, and obviously this month is now a negative print of minus 23,000 jobs. So the US economy hasn't created jobs in the last month. It's lost the amount of jobs there are in the last month. And like I said, that's the 3rd biggest monthly job loss since the pandemic, which was obviously over 6 years ago now. So yeah, interesting bit of data, and obviously sets us up for what could be an interesting afternoon. Like I said, I think precious metals obviously is the standout move of the day and probably the week, really. Like over the last few days, obviously gold's had a bit of a flyer, kind of just come from above 4,000 to currently at 4,350. So very big moves. Silver, percentage wise, is up even further than that, and like I said, is up 5% today. But we're obviously seeing the dollar turn around today and back below that 100 mark, and kind of continuing that move we've seen over the last week or so. Obviously, as the expectations for the Fed raising rates is lowering, and that's obviously with potential peace deals come into play in the Middle East. And obviously that means that if a peace deal comes into play, the price of oil will head a little bit lower, like we've seen. The inflation data will probably come back low and remain low, and we won't have an increase in inflation due to the increase in oil prices. And obviously then that all comes back to interest rates. And we're obviously seeing the dollar head lower on that today. Just having a brief look through, obviously the pound is up nicely against the dollar. The euro has been a bit of a better play. Dollar yen continuing to head lower now today, after we obviously had intervention the back end of last week, and the move carrying on this week as well. It's been massive moves in the dollar yen, from 164 last week to 155 at the start of this week, and looks like we could continue to drift a little bit lower for now. And really just on the front foot in the stock market. Nasdaq up 1% before the open, S&P 0.5%, and Dow just a little bit further behind. So nice move, setting up for what could be a nice Friday, really. It's been a bit of a busy week, busy couple of weeks, I think, in the markets over the last couple of weeks, really. And that was all kind of leading into today's data, which is obviously a very, very bad bit of data on the headline. And like I said, beneath the surface, if it is a huge loss in government jobs, maybe people won't care as much, but that's not what's going to steal the headlines. What's going to steal the headlines is, like I said, the 3rd biggest monthly job loss since the pandemic, and minus 23,000 versus the 80k expected.
So my question would be, James, what's the knock-on effect of this now? So it's 3 months in a row, So is this going to put pressure on interest rates within the US? Is that something we should be looking out for and to expect?
Yeah, well, it's just the battle of stagflation, which is a word that not everyone has obviously heard a lot. But stagflation is essentially when you're balancing two sides of the scales, if you like. When you have high inflation and inflation that's going up, the way you solve that is by raising interest rates. And as you raise them interest rates, the inflation will start to level out and start to come down, and you'll probably hold interest rates where they are for a little bit longer, and it will continue to bring inflation down. So that's how you solve having high inflation. You raise interest rates. But when you've got slow economic growth and people are losing their jobs and the job numbers are going down and the job opportunities are worse and worse and people are losing their jobs and the economy's slow, the way you solve that is by lowering interest rates. You bring interest rates lower, it makes borrowing money easier, creates more job opportunities, and it stimulates growth in the economy. We're seeing stagflation, which is when you have high inflation and a weak economy with not as many jobs being created. Now, one of them problems, you raise interest rates. One of them problems, you lower interest rates. You can't solve both problems at once because they both require different solutions. And
so we know from the Trump admin there is that pressure. Well, he actually wants interest rates lowered, so it'll be quite interesting to see what they're going to do. I think they're probably going to have to stay the same, right? While they're in this bit of a downturn at the moment.
Yeah, definitely. Just seeing the headline come through now, the US rate futures pricing just 28 basis points of a hike before December or by December versus what was 32 basis points before the jobs day. So not a massive change in interest rate expectations themselves, but 0.28%, so basically 0.25% hike by the end of the year. And my guess that would, when it says by December, that will probably mean in December, if anything. But obviously the interest rate expectations this week, there's been a slight dovish repricing almost across the board following the de-escalation in the Middle East, and increased hopes for a US-Iran deal. Oil prices have dropped below 80. They're currently at 77, which is obviously easing the inflation concerns a little bit. The only central bank where we saw slight hawkish repricing was the Bank of Japan. And the culprit was most likely that US Treasury Secretary Bessent's remarks in a CNBC interview when he stated that it will require policy to follow up on the intervention, and added that the US would not have joined if it was not optimistic about Japan policies, basically saying that there's no point in them intervening with the currency like they did the other week if they're not going to back it up by raising interest rates. And that's why we've seen a slight increase in the Bank of Japan. But other than that, everyone's turned a little bit more dovish. But going back to that stagflation debate, is you have high inflation, you have a weak economy. One side of the scales, you have to raise interest rates or keep them higher. One side of the scales, you have to lower interest rates and keep them low. You can't fix both things at once. And when you look back at periods of time when there has been stagflation, it normally results in one thing, which is the dangerous R word, the recession. Does it always happen? No, but you can't fix both things, and then it kind of leads you towards that area. So what will the Fed do? It's a battle they've been facing for a long time. You know, there are people calling for Walsh, the new chairman. You know, he's come in. Trump wants him to lower interest rates. NFP data's bad. Oh, you should be lowering interest rates. If we get a deal in the Middle East and oil continues to drop and the inflation concerns continue to drop, then it becomes a lot more possible. But obviously every week it's been a different story in the Middle East. One week there's a peace deal, the next week they're attacking and dropping bombs again. I can't keep up with how many times I've seen a notification saying there's been a deal arranged, and then it's like 3 days later you get a war alert on the screen and they're attacking each other again. So until there is something, I'd like to say until there is something solid in place, but I feel like we've had that 4 or 5 times already and it's been broken within a week. So until it's fully confirmed, and you'll know that by one thing, the price of oil dropping a lot lower.
Saying the same myself, you know, until we get that deal, you know, I wouldn't like to be, you know, analysing the chart, especially on the lower time frames. What I'm going to do, James, is I'm going to get everyone into the duck race. I'm going to share my screen unless you want to. And can you talk us about your up and coming event?
Yeah, I can give it a brief mention. Let's get that duck race sorted for everyone as well. For anyone that is watching, make sure you enter into the competition to win the 5K
do that
account.
Now. Okay, over to you, mate, with your event.
Do you want to ping it onto my screen? Do you want to ping it on my screen just so I can talk through a couple of the different bits? There we go.
Yeah, and just give the guys an overview of what you do as well, all the trade information that they can get from yourselves. And I'm just going to quickly update the duck race.
Will do. I will do. So Andrew mentioned our event. We was fortunate enough to have Andrew at our previous event on Saturday, the 2nd of May, as you can see, in May. Normally, and we're missing him today, I believe he's on a flight back over to Bermuda, but normally, obviously, Mandela's here on a Friday and multiple other times through the week with Andrew presenting. But Mandela presented our event in May, and Andrew was there, and there was 50 traders there. Great day, great event. Got to meet the founder of City Traders Imperium, who are obviously a partner and a sponsor with this YouTube series and the YouTube videos that we do. And Daniel is obviously the founder of CTI, and he was there speaking to people about his journey, and we gave out 5K accounts to everyone, and someone won a 50K account as well. But we have our next event on Saturday, the 3rd of October. It's going to be bigger, better, a lot more people, a bigger venue in Canary Wharf in London. Hoping that Andrew will be able to make it. I'm sure Mandela's going to be coming over as well. There's going to be a lot more traders there, so it's a full day event. But if you're interested, then reach out to us and you can organize your tickets. That's really one of the things we obviously do over at Macro Markets Group. There's many different things. We have the community. We work with great traders like Mandela and Andrew who help our students. We obviously have the events that we do as well, 3 times throughout the year, depending on the dates, where we get everyone together so they can learn, connect, network, have a lovely dinner together, and obviously open up some doors and opportunities for them in the industry. And then we also have the terminal as well, which is what you can see on screen, where we get all of our news, all of our information from you. Have the daily macro briefing every day, all of the recent news. You've got the news feed tab, which updates every few minutes, taking all of the news from around the world across all the different markets and industries, and updates you with the latest headlines. You've got the live squawk and the live headlines, which is where we get the news as quickly as possible when it comes out, and many more tools down the side: risk sentiment, cross rates, position size calculators, whatever it is you need. So there's lots going on, and obviously this is all in partnership with the work we do with Mandela and with Andrew, as well as obviously our partnered prop firm, City Traders Imperium. So everyone that goes on the terminal gets a CTI account, because it's all well and good having the tools, the webinars, the best news, the best research, the best charts, whatever it may be. But if you don't have an account to trade on, you've just got a load of tools that won't be making you profit. And obviously that's why we work with CTI, so you can get funded, get the right tools, get the right resources, be around the right people, go on, hit targets, scale the account, and obviously work towards having their big 6-7 figure accounts that they provide traders with. How's that duck race coming along, Andrew?
It was coming along great, and I went full screen and all the names disappeared. So I've just done the signature FX. We've got quite a few people to do. So, okay, guys, just bear with me, and this is why we do miss Mandela sometimes. So yeah, I'm just going to quickly update this. So I just need to quickly get back to it. I'm going to be about 2 minutes doing this. So I don't know if you want to run through any charts, and yeah, here we are.
I'll keep talking through a couple of different points, but like I said, reactions post NFP, gold's still ticking up and climbing further. Silver now at 5.5% as well. So looks like traders are taking precious metals home for the weekend. Obviously the dollar continuing to drop and is now at lows of the day. Euro dollar up 0.5% as well. But for anyone that is watching along, drop a little comment into Andrew's section box on the YouTube and have a kind of a little look at the charts and let us know what you're watching this afternoon, whether it's the markets, the indices, whether it's across the FX space, whether you're looking at precious metals. Also, obviously, Andrew mentioned Bitcoin, which is up 1.5% as well. Oil down 2% on the day. So drop us a little message, let us know what markets you are having a look at. But yeah, the bond yields continue to drop across the board. At 6 months down 1%, the 2 years down 2%, 5 years down 2%, the 10 years down 1.4% as well. So yields are leading the way in terms of the correlation. Obviously, very bad NFP data. We're hopefully getting good signs out of the Middle East, and that will ease the inflation concerns, which means the Fed, at the moment, like I said, are priced in for a 0.25% rate hike by the end of the year. But I'm sure the markets will be wanting that to change to no hike at all, which hasn't happened at the moment, but that's what the markets will be wanting. And any continuation of a Middle East deal and oil prices continuing to drop and inflation continuing to come lower, if we get that, and if the NFP data continues the way it has, like I said, the June data, which is obviously releasing the May's data but comes out in June, was expected at 85k but was 172. A month later they revised that to 129, so still a beat but wasn't as big as they thought. Then in July, when we got the June's data, they expected 114k, we got 57. Bad data. That's now been revised to 20, so even worse than they thought. And obviously today we was expected at 85k and we've had minus 23,000, which, like I said, is the third worst month since the pandemic for monthly job losses. And if NFP continues in this direction where the last couple of months have been revised and we're getting lower than expected data, I think if we get 1 or 2 months more like this, there will be a lot more pressure on the Fed to not hike and not hold, but to be cutting rates. And that could be good. That could be a massive opportunity for the second half of the year, because if we do get CPI prints that are good and we get a Middle East deal and the oil price does come lower and inflation concerns do ease, and if we do start to get some negative NFP prints continue like this, we could see a massive repricing in interest rate expectations where they're no longer expecting a rate hike for the dollar or the Fed to hold. But if they start to actually price in that the Fed needs to cut rates, we'll see the yields come a lot lower and we'll see the dollar come a lot lower. And that could be a great theme for, you know, the latter part of this year, the second part of this year, really, if we do see the dollar and oil and yields kind of reverse the moves they've had this year. If all of them things align, it could present some massive opportunities if the dollar does come lower and if them things do fall into place. So that's something I'd really be watching for over the next couple of months as the data comes out, is do we get a repricing in interest rate expectations from the Fed? And if they do completely shift the narrative of what they're looking at and we see the dollar come on like heading lower, it could present big opportunities. I'm talking over September, October, November, like in towards the end of the year. If they go from having to raise rates at the end, like by the end of the year, to actually we're not going to raise rates at all, we're going to hold, or we may even have to cut rates depending on what the data is. It could provide massive opportunities for everyone.
Yeah, that's great, James. You just answered some of the questions in the chat. People were asking, you know, what's going to be happening in the next few months. And for myself, yeah, totally concur with what you say. But for myself, I am nervous, you know, obviously what's going on in the Middle East. And we can just see, you know, one tweet or one bomb, right? You know, we start seeing the prices spiking. But for myself, quite excited about gold. You know, Mandela made a great call last week. He was talking, you know, what he's seeing for gold for the future. And potentially we could be looking at last year's high. So I'll be keeping an eye on gold. But for myself, I'm not trading these larger time frames. So really, I'm like in and out of the trades pretty quick when you're trading on a 5-minute, 10-minute time frame. So, but I'll definitely be keeping an eye on the price and that commitment of traders when it comes out on the weekend. I'll be reaching out to Mandela to see if we can potentially share that a little bit earlier rather than waiting a week. But we got the duck race sorted. But guys, one thing for the duck race I need to say to you, because Mandela's not sure, I haven't got access to the duck race back office. What you need to do, if you win, you need to reach out to me on X, okay? So my details are below. Reach out to me on X, and I don't want 3 or 4 of you reaching out pretending you're the winner. Someone done it last week. Yeah, our chat, James, yeah, a little bit unhinged on times, you know, a little bit naughty.
Sneaky.
So yeah, guys, if you're the winner, reach out to me. We'll sort the account out. Obviously, I can confirm you through your YouTube account with your registered email account. So make sure when you give me your email address, it is registered to your YouTube account. Okay, so good luck, guys, and here we go. Who we got, James? Who we got?
I can't see it. I think you have to share your screen back on. At the moment, everyone can see my terminal still. If you flick that over, I think everyone can see it.
Here we go.
Oh, I'm going with Cal then.
I'm going with Carl. I'm going with Trump. Yeah, we'll upset the few with that now. Come on, Donald Trump, Donald Duck. Well, I don't know. Jack's doing quite well. So we've got the general. Keep an eye on the general. He's a dark horse. He's been with us a long time. Oh, I don't know. It's pretty tight. Yeah, Trump's done a taco. He's chickened out. So here we go.
Oh, he's ducked out.
Oh, it's. Oh, look at Kapal go. Congrats, Kapal. Right, listen, you need to listen to me. Reach out to me on X. Yeah, you need to have your email address that's linked to your account. So let me just go into Kapal. So yeah, we got you, Kapalapi. Kapalapi, you're the winner. So yeah, reach out to myself on X. Details are below. Okay, guys, I need to bounce. James, thanks very much. You've been a lifesaver today while I tried to sort the duck race out. Lots of good information, lots of learnings. And guys, if you haven't already, get over to macro markets. The insight these guys on the markets, the mechanics, the workings behind those charts. It's definitely worth reaching out to James and Joseph. And if you can, attend the event in London. It's going to be great. Myself, Mandela, and the team from Macro Markets are going to be there. Okay, James, thanks very much.
Thank you very much, Andrew. Thanks to Mandela as well. I think he is watching while he is at Heathrow. Thanks to CTI, and hope everyone has a good Friday on the markets and enjoys the weekend.
No, brilliant. No, thanks, James. Yes, so guys, that was James, and I really appreciate him coming on the show. A bit of a lifesaver, actually, when I was trying to sort out the ducks. And his explanation of the NFP, it was top notch, and I think we need to get James back on again. As Mandela would say, happy trading. I will see you all next week. Duck race winner, message me on X with your email address. And guys, I'll see you next week. And a big shout out and thank you to today's sponsors, City Traders Imperium. Take care, chat. Have a great weekend.